Today I'm going to be taking a look into the Fastenal Company. A quick reminder, before making any sort of financial decision or investment, it's important to take the time to do your own due diligence. All the figures in this quick analysis are going to be valid as of February 8th, Fastenal's last financial reports, and as future quarterly earnings and 10K reports come out, these figures are going to have to be updated. So Fastenal first started off with one small store in 1967 with a focus on excellent customer service, something they've continued to do excellently to this day, and it's something that goes into every decision at Fastenal through their company motto, growth through customer service, which I really like, and obviously their customers like as well. The company started off selling threaded fasteners and has since expanded into 9 major product lines, the big two being fasteners and safety supplies. Their safety product line has been a big growth driver in recent years and has really shined during the COVID shutdown. I'm going to play a little excerpt from their latest earnings call here where Dan Florness, their CEO, really brings this to light.
Safety, as we've talked about on numerous prior calls, and I suspect continue to talk about in the calls as we enter 2021 because COVID is now behind us. But safety has been a performer for years, largely because it's a product line that meshes really well with our our vending platform. So despite safety being a little bit less than 20% of sales, it's produced for the last several years about 26% of our growth. But the contribution swelled to 156% in 2020. And as I touched on when I was first talking, it highlighted our problem-solving culture in the marketplace. And I believe this should open up new customer and end market opportunities to us in the future. And Holden will touch a little bit of that in his talk.
So something else that Fastenal has really been embracing over the last number of years that Dan mentioned there is their on-site and vending locations. Here's a little video that Fastenal put together that really explains their kind of overview of this process and some of the advantages it has for their customers.
When it comes to inventory, we understand your vision. You want less of it on your books, fewer touches, faster access, and more visibility and control. Above all, you want to focus on running your business, not managing parts and supplies. Fastenal is ready to help you get there with a simple value proposition. Great people, close to your business, and powered by technology. That includes advanced supply chain, warehouse, and transportation systems to keep product flowing to your facilities. Mobility apps that allow us to check stock availability, provide quotes, process orders, and update changes to your inventory anytime, anywhere. And an ever-evolving lineup of automated supply devices, extending the Internet of Things to products of all shapes and sizes, from these to these, and virtually anything in between. Track assets like tools, tablets, and scanners, who's using each item, and when it's overdue for return. Or use the same technology as a 24/7 order pickup station, either at your local Fastenal branch or within your facility. When your order is ready, receive a unique code that allows you, and only you, to pick it up. Control who has access to MRO, safety, and metalworking consumables, and capture the dynamics behind every item dispensed. Who, what, where, when, and why. Combining point-of-use access with total traceability. And electronically monitor your OEM fastener inventory to remove risk from production. We're using RFID technology to reimagine the Kanban concept. When an empty bin is placed here, you'll see a change in inventory state here, and an electronic order is automatically sent here, minimizing the time frame between min-level discovery and max-level replenishment. Our infrared bins bring this peace of mind to the point of use. The bins are equipped with infrared-emitting sensors and receivers. When stock falls below your target min level, a receptor is activated, signaling a change in inventory state while generating an order to your local Fastenal service team. Coils, pushers, weight sensors, infrared beams, RFID signals. Today we employ wide-ranging techniques to automate your inventory. And we're exploring new frontiers for the future, including innovations in the areas of van management, customer-managed inventory, asset tracking, and inventory monitoring. Our high-touch service and automated devices combine to produce unique insight into your business, and our reporting solutions help you turn that insight into impact. A great example is vending. Every time an item is dispensed, the transaction is tagged to an individual user and other custom metrics, such as GL code or job number. This information flows to your reporting dashboard, where you can apply the data to simplify job costing, identify overuse issues, and optimize the mix and levels of products in your machines for maximum cost savings. Looking to track specific aspects of your Fastenal program? Your Fastenal service team can provide customer reporting aligned with your KPIs, including cost savings reports that apply concrete numbers to your TCO initiatives. Meanwhile, our Fast 360 portal gives you a live view of your Fastenal program. Visualize how inventory is organized in your bin stock and vending solutions, as if you're standing in front of the device. Search to see if a needed item is available within your four walls and exactly where it's located. And analyze your spend by time period, product category, or individual part to discern trends and opportunities within your business. Looking for on-demand visibility to your Fastenal National Account Partnership? Our Fast 360 Analytics portal makes it easy to visualize your program from multiple perspectives. View purchasing and supply chain management activity at the contract level, or drill down to see what's happening at specific locations, with a variety of reports, filters, and visualization tools to help you understand your data story. As important as technology is, for us it's just one element of a total supply chain solution. Behind the devices and software are local experts to shoulder the burden of inventory management. A world-class distribution machine to bring speed and agility to your supply chain, and a commitment to invest in your success with the fundamentals of effective customer service. Great people, close to your business, empowered by technology. Fastenal, where industry meets innovation.
This is something Fastenal has been investing in fairly heavily since 2015, and they're really starting to see it pay off with their on-site locations making up 26% of revenue and attracting a lot of new customers. The majority of their transactions are business to business, with some walk-in retail business. Products are distributed to customers through branch locations and more recently their on-site and vending locations. At the end of 2020, they had 3,268 in-market locations across 25 countries. These locations are supported by 12 distribution centers in the United States, 2 in Canada, 1 in Mexico, and 1 in Europe. Having a look at some of their leadership here. Dan Florness, their CEO and president, chief financial officer here, he's been with the company for 24 years, where he's been slowly working his way to the top. And Fastenal really likes to promote from within the company. And this is something that I really like to see with any sort of company. I just believe it really promotes kind of a good culture within the company. Checking out some of the other leadership here, the average tenure at the company for their management team here has been 21 years, which is really, really impressive. They've been with the company an average 21 years, which is great to see. I think this kind of tenure usually indicates a great work environment and culture within a company. That's something, like I said, I really, really like to see. Jumping into some of the financials here. This is just all their original financials laid out here. Going through their annual reports, I didn't have to make any modifications really, except for in this latest fiscal year 2020, they paid a special dividend of 40 cents per share, and so I decided to exclude this from the long-term dividend trends just because this extra special dividend isn't something that we're going to see going into the future. Checking out some of their ratios and per share data. I usually like to compare the 3-year moving averages, just to give a little bit more even kind of trends into the long term, and even their 5-year trends. Their 5-year averages I like to compare just so I could really clearly see those trends. So check out the charts of some of these trends. These highlighted percentages are all the compounded annual growth rates since 2000. And as you can see, it's some phenomenal numbers. Sales, earnings, all growing at above 20%. Cash flow, especially in recent years, has really taken off, which is really pretty amazing. Their return on equity, return on capital, earnings margins, all kind of, people like to use these as measures of how effective the management has been, and these are all going up at a pretty steady pace, which is actually pretty rare to see. Very impressive. Looking at their current ratio, it's been declining since 2000. Usually this would be cause for concern. However, it's currently at 4, which means they've got 4 times coverage of their short-term liabilities, which is ample enough, and it started extremely high at 8 times. Looking at their defensive interval here, which is the number of days that a company can survive if their revenue completely shut off, and Fastenal is at just under 300 days right now, so they can survive just about a full year with 0 revenue, continue at their full operating costs, which is a pretty good mode if you ask me. Now having a look at their competitors here. They've got quite a few here. The main ones, however, are W.W. Grainger, HD Supply, and MSC Industrial. Genuine Parts, Applied Industrial, and Distribution Now have been struggling a little bit more, especially with COVID. Distribution Now is losing a decent amount of money. They've got no debt, though, so they should be able to weather this storm fairly easily. Comparing W.W. Grainger here, HD Supply, and MSC Industrial, return on capital is all fairly in line. Capital turnover, Fastenal is doing all right. W.W. Grainger is doing pretty well, turning over a lot of that inventory. MSC Industrial is definitely lagging behind. Earnings margin is where Fastenal really starts to pull ahead here. That's a really impressive earnings margin, especially for this kind of hardware business. Return on common equity, again, fairly in line. W.W. Grainger is doing a very, very good job leveraging up to improve that bottom line here, the common return on common equity. Genuine Parts doing all right. Payout ratio, all fairly standard. W.W. Grainger's at a fair bit less, but their dividends also paying out a fair bit less, so all pretty standard across the three companies here. Looking at their price to earnings ratio, Fastenal is trading at a premium for sure, and that just kind of reflects their better numbers above here, their higher rate of return and profitability here. Price to book, Fastenal is fairly expensive in that regard. W.W. Grainger is even more expensive. HD Supply, MSC Industrial is not as expensive. HD Supply has actually got a negative book value, and that's because when calculating this book value, we don't include any goodwill and intangibles, just because if a company were to liquidate, their goodwill and intangibles aren't going to go for a whole lot. Current ratios, all satisfying. Fastenal is a bit ahead of everyone else. Debt service coverage, Fastenal is completely in the clear. They don't carry a lot of debt. The rest of these guys are doing fairly well. MSC Industrial is a little bit low, but usually you'd probably want to see 2 times or more, but 1.78 is satisfactory. Defensive interval, Fastenal is really killing the game here. W.W. Grainger is lacking a bit here. HD Supply and MSC Industrial, they're doing pretty well as well. So all in all, Fastenal, W.W. Grainger, HD Supply, MSC Industrial, fairly in line, but Fastenal is the clear winner here, and of course it's reflected in their price to earnings ratio, the premium here. Getting into some of the analysis here of their stock price. Here we're going to look at their price, their historical price, and their historical price to earnings ratio. So this blue line here is the price that the stock's been trading at going back to 2010. And then if we look at their average price to earnings ratio since 2015, they've been trading at an average price to earnings ratio of 24.75. And so this orange dotted line here is going to represent the price that the stock would be trading at if they were trading at a price to earnings ratio of 24.75. So this is going to tell us basically whenever their price is above this orange line, they're trading above their average price to earnings ratio. Whenever the price drops below the orange line, they're trading below the average price to earnings ratio of the last 5 years. So we're going to say they're a little bit undervalued when they're below the line, and they're going to be a little bit overvalued when they're above the line, which is the case in recent years. So if we take this line all the way forward and we use their earnings here of $1.49, we value this company at $36.88. That's what we would consider their fair value based on this valuation technique. Now we'll also have a look at dividend and book value here. These two charts here are the dividend and book value going back since 2000. And we can see here that it's been fairly consistent growth over the last 20 years, which is very nice, and it's going to make our job of predicting their future value on this much more realistic. We've also gone here and we've got plotted 2 trend lines, and these equations are shown on the chart. And so we're going to use these equations to get kind of an eyeball guesstimate of what their future dividend and book value are going to be. So we've gone here and we've used these 2 equations, and we've projected this book value and dividend all the way down. And so that's going to give us a kind of estimate of what we think their book value and dividend are going to be into the future. Now we're going to go ahead and we're going to find the 10-year, the 20-year, and the 30-year, and then a future dividend values of the stock. And so this 10-year value is basically we're saying, all right, in 10 years, the company's going to continue running, and then once 10 years comes around, They're going to liquidate all their assets, pay off their liabilities, and we're going to be left with the book value. So we're going to be left with the book value and all the cash dividends we would have received, and that's going to represent our 10-year value. And so that's our book value at year end and all the dividends we would have received. Now, it's also important to note that a dollar today is worth more than a dollar tomorrow. So we want to discount any future cash flows like this back into today's current dollars. And so what we're going to use to discount that, we're going to use Treasury, our 10-year Treasury yield, 20 and 30-year Treasury yields, which today at February 11th were 1.09%, 1.66, and 1.84%. And so that's what we're going to use to discount our future cash flows. And so we've repeated this process for the 10-year, with the 20-year, and the 30-year current values. And as we can see here, the value is going up as we hold the company longer, which is something we like to see. If this value were to be going down, then it would make more sense to just liquidate the company today and collect our money than holding it. So if this number isn't increasing, that's going to be a little bit cause for concern, and we're going to have to dig into that a little more. But this basically means the longer we hold this company, the more value we're going to obtain out of it, which is great because whenever we buy a company, ideally we're going to be holding it forever. Now our last year, this future dividend values, we just chose to do the 50-year here. If we hold this company forever, then our book value is not going to matter to us. All we're going to be collecting are the future cash flow dividends. And so when we're discounting these future cash flows into today's dollars, we're going to use this 100-year rate. And this is something the St. Louis Federal Reserve website has a great job. They have some great resources on there. And since there's no 100-year treasury, they basically take the kind of all the way from the 1-month treasury bills and then up to their 30-year treasury yield, and they extrapolate that forward, and they're going to give us their kind of best eyeball guess as to what if there were a 100-year treasury or a 100-year kind of investment grade bonds trading at, they would probably trade at 3.15%, and that's what we've used to value our future dividends. And that, again, is higher than our 30-year value, which we'd like to see. So averaging those numbers out, we're going to give us an eyeball of $54 just because, maybe things don't go well for Fastenal and they do end up kind of calling it quits in 10 years. Or maybe they go the distance and they're a company, they're around forever. So we're just going to kind of average these numbers out, and that's going to give us an eyeball, kind of a good eyeball as to roughly what ballpark they should be trading at. That was their fair value. So we think that's $54.64. So we're going to use this value and the value we found with our historical price to earnings analysis. We're going to average that out, and that's going to give us a fair value of $45.76. And that's our best guess is what we honestly think this Fastenal company is worth today, $45.76. And right now, Fastenal is trading at not too far above that, $47.66, because the market is pretty efficient. They do price these stocks well. Now, yeah, we'd feel okay buying it at fair value, but what we really want, we want to buy this at a discount. We want to buy stocks for cheap. We want to get a good deal. So what we're going to say, up here is our chart. All these prices are the prices that we would have to buy. This is the number of years that it might take for Fastenal to reach their full potential, hit their fair value. On the left here, this is the return that we would expect. So say if you think it's going to take 2 years for Fastenal to get up to their fair value and you want a 20% return, then buying the stock at $31.78 would get you that 20% return over 2 years. Usually what we like to do, we like to give a stock 3 years. That seems like ample time for a company to reach their kind of fair value potential in the market. And we like to shoot for a return of 15%. So we're going to say we're going to go ahead and buy this stock at $30.09. If you're looking for a higher return, you could buy them lower. If you're looking for a lower return and maybe you think it's going to take up to 5 years, you could go over here. But we're going to stick right in the middle here. 3 years we're going to give them, and we want to be earning 15% a year. And that will give us our buy of $30.09. Now we also want to take a sell value. All going well, we'll hold this stock forever. However, at some point, if the stock becomes overvalued enough that we think we can sell the stock, pay our taxes, and then reinvest that money and earn a greater return than if we had just held the stock, we're going to go ahead and do that. So we say this value here is 25% above their fair value. So we think, if Fastenal gets 25% overvalued, we think that we can reinvest that money after paying our taxes, which is important to consider. We can earn a greater return in somewhere else. So to summarize here, Fair value, $45.76. We're going to go ahead and buy the stock at $30.09. Their 52-week low, by the way, is just around $26, so this price is attainable. And then we're going to sell the stock at $50.20. Now, also, it's important to note, every quarter, these numbers are going to be updated. They're going to release a new book value, new earnings, and these numbers are going to be tweaked slightly. Hopefully, they'll be going up if Fastenal is doing well. And with that, we're going to call it quits. Thanks for tuning in. Hopefully, you guys learned something from this and got a little insight into Fastenal Company.